What makes an episodic pivot more explosive? Episodic pivots can be very explosive if there are certain circumstances present for this particular stock. Yesterday there was a stock which made a big move, and that was PI, which is Impinj, and as you can see it made a move of 28.65%, and the catalyst for this particular move was earnings. Now if you see what made it so explosive, there are a couple of reasons why it became so explosive. And those couple of reasons why it was so explosive. One was like if the price action prior to the earnings. Price action prior to the earnings, the stock was just going sideways. It wasn't really rallying strongly for the last 2 or 3 months into this particular earnings. So if you look at like in the last 2 or 3 months, the stock was up around 10 or 15%, 18%. So that wasn't right. And if you see just before earnings, this is how it looked. So it wasn't rallying into earnings, strongly into earnings, right? That's one factor. The second factor, which makes it more explosive, is if you see the float. Float is very small, 17.7 million shares traded. Now that, as against that, when you see stocks like Google or Microsoft or Amazon, they have such a large float that they cannot make these kind of explosive moves in a short period of time. So float is very important. In addition to this, this particular stock had a high short interest. So if you see here, the short interest on this stock is now showing 8.7 days. But yesterday, if you looked at the short interest, because short interest is dynamic, was 10 days. So 10 days of short interest is there on this stock. The 10 days of short interest makes it more explosive because those shorts are supposed to cover on any good news. In addition to that, if you see the number of stocks, mutual funds holding these stocks was not very high. 318 mutual funds is not very high. Many of the stocks which make good episodic pivot have very low fund ownership when the catalyst shows up. The lower fund ownership is the reason why it goes up explosively as funds try and get into that particular stock. So float was very important. The other thing was the other one additional factor which was important, which made this stock go up very aggressively or like very rapidly, was basically if you look at the analyst price target raises. On this stock, you had 5 analyst price target raises yesterday. Now there is a difference between analyst upgrade and analyst price target raises. Analyst raise price targets when there is a new information. Whenever a new information which is game changing or a new information which is likely to make the stock price go up or go down is when analysts make changes to their price. Now in this case of Impinj, there are 5 plus analysts which increase the price target, and that price target increase was substantial compared to where the stock was trading. Before this particular earnings, the stock was trading at around 127, and basically they increased their target to 150, 160, and that was one of the reasons which adds more fuel, because the retail traders may not be paying attention to analyst price target raises, but the institutional players do pay attention to analyst price target. And in addition to that, the amount of surprise in terms of it's like basically if you look at the news, it had 72 to 77 cents versus consensus of 19 cents. So analysts were expecting 19 cents next year, or see in the next quarter 19 cents, or while it is guiding for 72 to 77 cents, which is 4 times higher, or 3 to 4 times higher. Similarly, the analysts are projecting 78 million shares, and there were 96 million to 99 million was their guidance. So guidance was the main story in this particular case. If you see, the guidance was 72 to 77 cents versus 19 cents expectation by analysts. The revenue was 96 to 99 million as against 78 million the analysts were expecting. So this came as a surprise to the market. When the information comes in as a surprise to the market, then what happens is the market reacts very violently, or the market reacts and tries to price in this new information. And as a result of this particular stock on the first day itself made so much big move. I wasn't expecting that it will make such a big move on the first day itself, but that is what those factors, if when they are present, is when you get these explosive EPs or explosive repeats. Like when you have these kind of situations, like in a route was one where like you had a lot of neglect and people were looking at it for a long period, like it was neglected, and that is why it made a big move, right? Similarly, if you see whenever there is a stock which has neglect and then it has a catalyst which is a really big catalyst is when they make big moves. So if you want to find these kind of moves like PI, what you have to do is you have to look at what stocks are showing up, right, in your scans in pre-market, which stocks are going up, but just don't look at their earnings and sales. Look at congruence of factors. They look at multiple of factors, and the most important factors which will determine explosivity is high short interest. If the high short interest about 5 days, and the higher the short interest, the more explosive the move is likely to be. Lower the float, more explosive the move is likely to be. Lower the fund holding, more explosive the move is likely to be. Lower the volume before the daily volume is very low, there is very little volume in that stock before the catalyst comes in, that is likely to make a big move. If there is very little news flow on a stock, that is also good, because then it is likely to lead to a big move. And if analysts, 3+ analysts raise their price target, and the more analysts raise their price target, better it is, then that is going to lead to explosiveness. So you need to create a watch list, you need to create a catalyst, or you need to create a checklist of these kind of criteria if you are looking for an explosive episodic pivot trade.